have to. Oh my goodness. I didn't click go live, guys. Now I'm live. Jesus. Sorry. Here we go. No wonder why someone left. I wasn't even live. All right, guys. I'm sorry. I was talking to myself. Apparently, I never clicked go live. So someone let me know if this is working here. I want to say it was recording, so maybe after this live stream is over, if you rewatch it, you might see what I started with. But as of right now, I don't know. I really don't know. I have no idea. So we'll let you guys funnel in here. And I need to wait for someone to say hello. Say howdy on this 4th of July weekend. Thanks for the like, whoever did that. So, it's working. Thanks, Nicholas. So, whether you're here live or you're watching the replay of the video, I'm going to go over weekend analysis. The stocks that I personally look at, Tesla, Amazon, and even SPY as well. AMC is going to be incorporated, but I haven't really been touching that thing lately. It's going good, Ben. What's up, J-Dub and Aero? Yo. Welcome in, guys. So, yeah, so I'm going to be going over some technical analysis to figure out what trade I want to open next week, which it would be Tuesday because Monday markets are closed. So I want to figure out what trade I'm going to be opening on Tuesday, and it's going to be a credit spread. And I'm curious, are you guys playing credit spreads too? Are you even like doing these types of trades, or are you just saying hello? Are you just in for the fun of it? Like, do you guys day trade? Do you swing options, or do you actually do credit spreads like I'm doing here? I'm curious. As you guys type, I'm just going to take a look at the things. So Amazon looked crazy. SPY almost all-time highs, just unbelievable. Doesn't stop going up. And Tesla is a handful. We got stuff all over the chart. So maybe we'll touch Tesla last. Demetrius, hello everyone. Hello to you too. Just learning. Well, if you're just learning, the technical analysis can help for sure. The credit spreads will probably be over your head, but the bulk of today is just going over technical analysis, so this should help anyone who's just learning. Okay, so let's start with Amazon. So watching and learning, good job, Ben. So we'll start with Amazon because it looks clean. One hell of a Friday for Amazon. In my last video, my weekend video last week, when I was going over potential trades, I went with Tesla. I told you guys I was going to go with Tesla, and that worked fine. But I said if you guys were a little less confident in Tesla, then go with Amazon. Amazon looked pretty safe as well. These two yellow lines were spread levels that I recommended because, let's go to the weekly chart. So this red candle was the candle that we last had in my last weekend video. That was the last data point. And I said that I was overall relatively bullish on Amazon, so I would have done a put credit spread at this bottom yellow line, and that would have worked out perfectly. But if you were a little bearish on it, I would have recommended the 35.30 call credit spread. A little less premium, but that would have been the level I would have chosen. That, was at risk. That was at great risk on Friday as it ripped up close to that level, in which case that could have been the end of the trade, but it stayed below it, and both levels would have worked out no problem. So Amazon would have been a complete success no matter which you did. And Tesla, I played this yellow line here last week. What? That's my cat saying happy 4th of July, guys. Tesla, I did the yellow line here. So go to the weekly chart to see, yeah. So this large green candle was what we had last weekend. And I felt safe playing the 635 level, this previous breakout level, which I figured would act as support if it ever dropped back down there. Plus, we were above this orange bull flag So I just felt very safe with that, and that worked like a charm too. So that was the trade that I recommended, that I actually took, and it worked out perfectly. I got like $300 from it with 6 contracts. So let's see if we can keep this going. Let's see if we can keep finding some good setups that actually work. Let's check the comments here. I'm just here to support the dude I watched since last March. Well, thank you for the... What are you doing over here? This is my cat shredding stuff for me. Go play over there. Thank you for the support since last March. COVID, that's pretty much when... that's when I really started. I started in last February 2020, so you've been here since the very beginning. And then you know how crazy I've been over the past couple of years, going from up, down, left, and right pretty much. So thanks for the support. Yeah, overnight stuff, I understand. It is nice to be cash at the end of the day and not have to worry about anything, or not worrying about what's going to happen with the gap tomorrow. Don't care. Doesn't matter, because you don't have anything outstanding. Jack, same here, Josh. I used to swing trade. Now I just scalp my stomach. Couldn't stand overnight stuff. Yeah, it's not too bad. I mean, with spreads, that is. I don't know. If I was swinging options overnight, just long options or single options, then I'd be a little worried, depending. But I don't know. With spreads, your loss is relatively capped. So, but I know what you mean. Anyway, so let's get going. Let's start with Amazon. So what a day. What a Friday it had. So let's get rid of these yellow lines, because that was last week. That's old news here. I'll start on some moving averages and see what we can find. Actually, no. We'll start without the moving averages. Go to the weekly chart. I got rid of this line. Okay. All right. So these orange lines are just a channel that I've identified Amazon to be in since now almost 1 year. Just about. Well, actually, July 2nd, 2020, we closed within this range. So it's officially been 1 whole year of Amazon being in this range. Kind of crazy. However, I think, are a serious potential of breaking out. We had this huge rip up here, which was thought to be Prime Day. The Prime Day was the catalyst for a nice move in Amazon. And then after Prime Day, we had a sell-off. That was what I was worried about. That's why I didn't play Amazon the other week. But the sell-off stopped relatively quickly. It only stopped, it got down to 3,400. No lower than that. Every time we've tapped it so far, what I was saying in one of my videos was, every time we've tapped the top line of 35.50 about, we've come all the way back down to the lower range of 28.80, 28.70. And then we'd float in the middle, and then we came all the way down, and then we came all the way down to 28.80 this time in March, and then went all the way back up to the top of the range at 35.50. Last time we touched this, we went all the way back down, bouncing off this range, but not this time. We didn't go all the way back down. We stopped in this range here. A higher low, if you will, and now we're giving it another shot. So that tells me that the bulls they have more firepower this time. They tried to get through it up here, it didn't work, and now then the bears tried to rip it back down, but the bulls said, no, we're not going back down there. That's old news. We're not breaking below 3,000. We're going right back up to 3,500. So the fact that the catalyst of Prime Day is behind us, and yet we're still pushing right back up, tells me that we could be in for a potential breakout. Now, unfortunately, I tried to play this breakout here, or basically this range. I tried to play the breakout of this range here, yes, on Friday, but I didn't have buying power for it, so that would have been a fantastic trade. I would have been up like over $1,000 right now if I'd gotten in where I wanted to, but I didn't have the buying power. But anyway, that's a nice bullish breakout. I think we're going to be testing the highs back here of 35.25 if we can get through there. Clear skies to 35.50, the top of this year-long range. And I honestly think we're going to break through it if we get up there again, because the fact that we had a much higher low and now we're giving it another shot tells me that it's pretty strong. So because I think it's very strong, I have no problem playing put credit spreads, meaning that I want Amazon to stay above a certain price. So we'll start with this line here. Without any moving averages, we're just playing horizontal support and resistance, and then we'll throw on the moving averages to see if we can get a little bit of a better spot for a spread. So initially, I'm thinking this range here that I just said it broke out of, well, there's a lower range to that too, which would be about 3,400, and Amazon would have to sell off, go back into this range, and then break below the range. We just broke above it, so I'm pretty strong. I feel pretty strongly about it. I think Amazon's strong and won't really pull back and go all the way back below 3,400. So I think that's a pretty good spot. Now it's about $110 away from the current price. So I'm not sure how much premium you're really going to get. We can check. We can get an estimate. This isn't really perfect because there's going to be theta decay come Tuesday and all that stuff. Relax. My goodness. Sorry about that. My cat's in the background. Can't do anything about that when it's live, right? So 3,400 put credit spread. That would give you, yeah, it's looking like about $30. I mean, like I said, this is a very rough estimate. But it looks to be about $30, $40. Which isn't really that much. I personally want to look for like $60, $70, $80. 60 like the least. Preferably around 70 to 80 per contract. Like I said, we're over $100 away from the current price, so the premium you're going to get isn't that great. I could go as high as this little area at 34.10. Now, it might not be that much better. 34.10, okay, maybe $60, maybe. The bid ask is all over the place. Doesn't really make sense. Probably not 60. I mean, the midpoint of spreads that are further out of the money are like $20 to $30. So this one being 60 doesn't quite make too much sense. But that's something to keep an eye on. If it is $60 or so on Tuesday, then that's worth taking, I think. It's not quite the very low of this little consolidation range because I would be down here at 3,400. But it is support. It's a couple candles pretty much touch it there, or almost. It touches it here. Even pre-market support over here and resistance on this day. So, yeah, that's a pretty good level. Going up a little bit closer to the money, within $100 now. So maybe you'll definitely get better premium than the 3,400, but probably not by too much. Can we get closer? Manuel. Yeah, wait for a pullback in Amazon. You could. Well, when it comes to like going long with single options, yeah, definitely wait for something. Like, because I wanted to go long on Amazon, but I couldn't. So I could wait for a pullback and then go long. But when it comes to spreads, you really want to open them as soon as you can, like first thing during the week, because that's how much on Monday, or in this case Tuesday, you're going to have the most extrinsic value that you can get, time value. So every day that passes, the premium you're going to get for the spread is going to go down, especially if it starts going away from that level that you wanted. So I do like to open them as soon as I can rather than waiting for any type of movement. That's why I'm making these videos. That way I can kind of draw out these levels, and if it looks like we need to wait for a pullback, then maybe Amazon isn't the trade for us this week. But 3,400, 3,410, I mean, seems to be fine. You could go a little bit riskier and go at the bottom of this last candle on Friday, around 3440 maybe. No, 3435 is what I would do. So 3435. This says $50, but around it says 60 to 70. So maybe you can get 60 to $70 by playing the 34.35 level for a put credit spread. You could go a little bit risky, but at the same time, logically, safe, right? And play the top of this range. 34.50, 35.50. Like I said, it's been in this range for a year now. Now, to me, we look like we're approaching it very strongly. But that doesn't mean it won't work again. And the 35.50 is only $40 away from the current price. So it's very close. I'm sure you're gonna get a lot of premium. 35.50 call credit spread would get you over $100. It says about 150. It's probably like 100 to 150, somewhere around there, 120 to $150 for a call credit spread at 35.50. That would be playing this level, saying that if Amazon does push up to this 35.50, it'll probably bounce off and reject, just like it did over here, just like it did over the beginning over here. So you could. I personally would not feel that safe with it, to be honest. It's logical. It does make sense. We've approached it before. We've had a similar instance back here where we had a strong run up and then a pullback, but not that much of a pullback. We kind of stopped right here and then pushed up, but we still couldn't break it. And that's kind of what we have here. We have a nice strong push to the upside, and we pulled back, but not too far, only up to here, and then we're pushing back up. So it could reject just like it did over here on this day. Even after a strong push up, a minor pullback, and then a rip higher, it's still rejected. We could have that over here, although this pullback is higher than this one over here in the past, so maybe that's even stronger, which is why I wouldn't really want to do a call credit spread. But if you're feeling ballsy and you don't think Amazon would push through, then that would be a pretty good level. But I personally, not a fan. So maybe Amazon won't work. So we'll start on some moving averages to see any other resistance, or I mean support, for a put credit spread. Yeah, no worries. Haven't messed with spreads yet. It's a little complicated. I mean, first you have to learn what options are, and that can be complicated in itself. And then spreads is a whole nother mind game. But once you get it down, you realize, oh, it's really not that bad. It makes sense. If you're interested, I do have videos on my channel. Just go to my educational video playlist, and you'll see my video on credit spreads and debit spreads. What I like about spreads the most is that options are great for a small account because you get a lot of leverage. You can, with small amounts of money, you can get good returns. You can play with Tesla, play with Amazon with small amounts of money and still make a lot of money. You can buy a contract for $1,000 and make $500, no problem. You can't use $1,000 and make $500 with stocks, right? It'd be really, really tough, or you have to get lucky with the penny stock. So options are great for small accounts, but yeah, small accounts are usually with beginner traders. Beginner traders have smaller accounts, and the thing they go to is options, and that's tricky because options are very risky. So it's kind of like a double-edged sword where options are great for small accounts, but small accounts are typically with beginners, and options and beginners can lead to trouble. So how can we use options and make it less risky? Well, that's where spreads come in. So spreads, I like spreads because they take options which are inherently risky and they make it a little more safe, which is great for beginners because it still jives with a small account and it's not so risky. But anyway, so that's Amazon. If I want support with moving averages, I could play this 10 moving average, get a little bit closer to the money. The 10 moving average is at 34.58. So maybe we could play 34.50, get just below that 10 moving average, and see what we got there. So a 34.50 put credit spread would be about, this says $35, which is dead wrong for sure. Probably $60 to $100, I would say, the 34.50. So that would be a decent spot that you have a moving average ahead of you for potential support. You have the highs of these candles here. All three of these candles, their highs, the tops of their wicks are above this level, so those could provide some potential support as well, maybe demand zones or something. So that could be a good spot. It's closer to the money. You get more premium for it. And I do think Amazon's bullish, so it might not even come down here at all. So, but you have to think like that. I mean, the weekly chart is this. I think Amazon would have a green week, if not a little bit of a pullback. So, in that case, any put credit spread would work if I believe it's going to have a green week because it wouldn't go down at all. But you got to keep in mind, what if it does go down? Is there anything that could potentially stop it from going down? And that's where that support comes in, and that's where you can design your levels, your spreads around. So 34.50, we'll keep that in mind. I just don't feel that great about it. Even though I'm bullish on Amazon, it feels a little too risky to me. So we'll go back on that. We'll go Tesla next. Ben, would you scalp with options on Webull? Yeah, so check out Emotional Trader. He has a lot of live videos of him scalping options, and it's worked very well. I mean, the execution speed isn't that bad at all. You can set up hotkeys to make it pretty quick, and then you can get in and out nicely. So if you want to see what the execution speeds are like and how well it works, check out Emotional Trader's videos. He'll give you some good examples. I would do it if that was the route I went down. I would do it with Webull. No problem. So, okay. Looking at Tesla. Lots of lines because I've been watching this like a hawk. There's this nice big orange bull flag that it broke out of recently. We're chilling above it right now. Here's the orange bull flag. Go down, and then there's a mini purple bull flag right here that formed where it broke out of the bull flag, and it caught me. Not only did it break out of the bull flag, right, it broke out of the highs of this consolidation. So even if you're not a believer in the flag per se, or the pennant, you can't argue the fact that it broke the high of this consolidation range, which would be this green candle here. If I went to the hourly chart and zoomed out, this was the high of this whole entire range, and we broke out of it up here towards 700, but we got stuffed by the $700 level and came right back down. Not right back down, but all the way back down. And I did buy a long call contract up here, got stopped out for a loss. But that's not good. I mean, the fact that we were having a nice bullish pattern here, and we broke out definitively. We broke out. The flag breakout was at 690 about. We went all the way to 700, breaking all the highs of the previous days. But yet we came all the way back down. So far down that it was red on the day. Where did it open? It closed 8 cents down. So not that much, but technically a red day. We closed 8 cents below the open after ripping all the way up like $22, $21 upwards. It came all the way back down and went red on the day. So, I mean, I don't know what more you'd want from Tesla to go long on it. It broke the bull flag. It broke all these highs. Couldn't get through 700 though. And that's fine that it couldn't get through 700 on the first try, but the fact that it went all the way back down makes me worried. It really does. It's so far down that it actually hit the bottom of the flag before popping up a little bit. So that's very scary. That's very scary. We didn't really get much of a bounce off the bottom of the flag either. We didn't go green or anything. We didn't look like we'd give it another shot. We're way down here. So, I mean, every bullish attempt to get through this failed on Friday, which tells me maybe we're going to break below this. I'm a little nervous with Tesla now. Yeah, I was watching Josh. You said the amount of orders sitting at 700 was nuts. I believe it. I didn't see the level 2, but I did have Webull up, just the chart, and I was watching it tap 700. It tapped it like 3-4 times, and I'm like, come on, give me 701 cent, give me 710 cents. But every time it tapped it, it just never got higher, came right back down. And I believe it. I mean, when was the last time it hit 700? Back here in May. So 2 months ago, it was at 700. Yeah, so that's tough. I honestly feel like you could play a call credit spread at 700 because the fact that it rejected so hard off of it makes me a bit bearish, to be honest. On June 30th, this middle candle here, we tried to push high. We tapped the top of the flag, tried to break through it, couldn't, came all the way back down. Go to the hourly chart. Yeah, so right here. Whoops. We pushed up strongly, tapped off the flag, pulled all the way back to the point where it was red on the day. And then after that, we had a red day. And then we broke through the flag, broke through all these highs, got rejected, came all the way back down, and closed red again. I mean, this daily chart looks terrible. Like, these candles look terrible. Every move higher is just ripped right back down. So I'm actually bearish on Tesla at the moment. It could go right back up, for sure. But to me, I'm almost thinking about doing a call credit spread at 700. Saying that Tesla will not go above 700 this week. It's a shorter week, so that's in our favor. Less time for it to happen. So a 700 call credit spread with a width of 5 gets you about $100. These look a lot more accurate than Amazon's. Everything seems to be in ascending order, the way I would expect. So about about $100, which is actually really good. I like at least 60, closer to 80. If I can get over 100 on a contract that I feel comfortable with, that's amazing. So I'm going to have to really look at the gap of Tesla on Monday or Tuesday. If it looks like it's a strong gap up, then maybe I'll hold off on it. But if it looks sideways or even down a little bit, then I'll feel even more comfortable with the 700 call credit spread. It is a bullish pattern, though. We are still in a bull flag, but the fact that we broke out and came back down, I mean, we could easily break below the bull flag. That can happen too. And then we come back down to this orange line maybe. So yeah, 700 call credit spread on Tesla. That's kind of what I'm looking for. Is that the one I'm going to take? I'm not sure yet, but that's what I got. Yeah, those tails are ugly. They're terrible. Every push up is rejected. In a bullish pattern too, you would think in this bullish pattern, this bull flag, that we would like a breakout. We would like that push upwards, and that we would get some people stopping out, more people buying, and we'd push up, but we didn't. We did not. So, yikes. Watch out for Tesla. It could be coming down this week. Let's check out SPY. This has been on a tear. I actually haven't played SPY in a couple weeks, and we just continue to make new highs every single week. That's what it feels like anyway. Here's the weekly chart in this range. Maybe that's a better line there. So we've been in this range for a while. It's weird because it's not perfectly parallel. It kind of fans out. But you could play the tops and bottoms of these ranges. The top of this range on this week would be around 447. So maybe 450. A 450 call credit spread is probably not going to get you much at all. Make sure I pick the Friday expiration. 450 call credit spread isn't even on the... Oh, no, it is. It's on the list. Yeah, 1 cent. That's the thing. You don't get much premium with SPY spreads unless you're really close to the money, because sometimes SPY doesn't really move that much. I mean, this green week here, it moved up $3. On this green week, it moved up 3 cents. I mean, it moved a lot intraday or intra-week, but at the end of the week, it only moved up 3 cents. This candle, the entire range was $4. The entire range on this week was $6 or $5.50. This range was about $4. This big red candle, the range was $11. So that was some volatility there. Same thing on this green week, but typically like $5 is the whole entire range all week. So if you're going way further than that, in this case, $16 away from the money, then you're not going to get much because the expected move is relatively small. However, SPY can move at a moment's, at like the drop of a hat. You never know what kind of news is going to come out that could affect the whole market. But I can't help but stay bullish. I mean, every single day I look at SPY, I'm like, how is it going higher? I just don't get it. So initially, I mean, right away, I'll just say the bottom of this weekly candle. This is the weekly chart, so we're only concerned with one more candle when looking at the weekly chart. I feel bullish, and I would say that SPY would stay above this level. It wouldn't go down and break below the low of last week, I don't think. Sorry, I had to pet my cat. Just missed your fill on Apple call option at 137.98. Yeah, we'll look at Apple in a second, because Apple's been doing pretty well for a little while. So, yeah, SPY. I can't help but feel bullish on it. Even after that big drop a couple weeks ago, after that FOMC meeting, it came right back up, made new highs, and then continued new highs. So, I mean, it's just a machine that keeps going up. I wouldn't feel crazy to play a 425 put credit spread, which would give you not a lot, really not a lot of money at all. 13 cents for a $500 collateral or risk. That's why I'm not a big fan of these spreads with SPY. To get a nice solid premium that I'm happy with, I'd have to play like the 432 range. And that's all the way up here. I'd have to play this level for a put credit spread to get a good premium. And that's just not going to happen. I'm not doing that. Here are the moving averages. Daily chart. I mean, if I think it's going to have a green week and just end higher than it did this week, then yeah, any spread at the money or below would be fine. I could do a 434 spread or 435 at the money or even in the money a little bit and just hope that it goes up. And it might. There's a very good chance that it would. And then, you keep all that premium. Yeah, if I did a 435 spread, where is it? Yeah, 435 put credit spread would give me like $180, and I just need it to go above 435 for the week. But I wouldn't do like in the money credit spreads. That's just very risky in my opinion. Okay, so I don't think I'm going to touch SPY at all. I do want to go back to Tesla because I forgot to put on some moving averages, I think. Or did I? Yeah, all the daily moving averages are below the current price. They're all over the place, but they're below the current price. So I don't have to worry about any of that. There's no like resistance with regards to moving averages in our favor. So, yeah, I mean, just the fact that it pulled all the way back down tells me that I'm just a little bearish on it. If it does push up, there's really not too much resistance in our favor to keep it from going up, other than maybe the top of this bull flag and, of course, the 700 level in itself. And by the way, I'm stopping out of these when it hits my level. So if I'm doing a 700 call credit spread and Tesla moves up and hits 700, I'm closing it. That'll give me a 50% loss, 50% of the max loss, and then less any premium that I receive. So I think that's a good way to put it, because if it goes all the way back up to that price, there's no sense of playing with it any longer, because that's not what I want. I'm calling for Tesla to stay below it. I don't want it to go anywhere near it. If it does, then to me that's a failed trade. Even if it ends up going back down and closing below it, and I'm wrong, that's fine, and I'm wrong to close it, I mean. But it shouldn't go up there at all. And if it does, I should just get out and not play with it any longer. Nvidia, yes. Let's check out Nvidia, Ben. Holy cow. This has been on my watch list too. Straight up. My goodness. Why? Oh yeah, artificial intelligence computer company. Yeah, isn't the graphics card in my computer Nvidia? But why? Why does it keep going up? What's going on? I keep adding widgets to this chart. Let me get some news going on here. Add a widget. Include it in this window. Here we go. Crazy stuff, man. The thing is, I wouldn't know what to do. Every week has been green. Crazy. Call credit spreads would have worked every single time, no matter what level you chose. Just the greedy market that we're in. The stock split? You think there's a stock split going on? Is that true? I'm not sure, but holy cow. This is the weekly chart. So we just continue going to all-time highs. I've been watching it for potential swings with call options, but it hasn't been setting up any pullbacks or nothing. It just keeps going up. Maybe I could play this 10 moving average. Every time we pull back and hit it, we move up. So I could play that. It's a very aggressive, strong, bullish play. But it's been working so far. What kind of spread levels would we get? So maybe if I do like an 800 put credit spread, it'd give me potentially over $100. That's actually not bad. That'd be this right here. There's no moving average support in our favor, though. There's really nothing except just the bullish momentum. Just thinking that it'll keep going higher. That's pretty crazy. So you could do that and just hope that it keeps moving higher and you'd be fine. But at the same time, you can't help but feel like maybe it would roll over at some point, at least a little bit. The RSI, holy good God. It's been overbought for a month, and it doesn't stop. Weekly chart, overbought on the weekly chart too. Yeah, I wouldn't really touch this, to be honest. I wouldn't go long yet. I wouldn't do a put credit spread because it could easily come right back down. But I wouldn't do a call spread either because it could just keep going up. So it's just it's a moving train that I don't want to jump on right now. That RSI though, it's unbelievable. So it's crazy stuff. If anyone's been swinging it, then congratulations. But I just don't see a good entry yet for it. Oh, okay. So they announced a 4-for-1 stock split. Interesting. But yeah, Apple. I want to look at Apple too because this thing had a nice breakout right about here. This is the range that I was watching Apple with. It actually broke out like a couple days prior to when I actually started looking into these setups, where I had my shop trade and my Tesla trade and all that. I was looking for these setups where just long consolidation, then a breakout. Apple already broke out by the time I saw it, so I didn't play it. But if you did, then you can see ever since it broke out of this range, it just hasn't stopped. Now, it did pull back quite a bit in these couple days here, in which case, if I was long on this breakout, I definitely would have stopped out before it moved even higher, which is a shame, but depends where you put your stop. If I had my stop at this breakout level the whole time, then I would have been fine. But I look for higher lows to continue. Once the higher lows stop, then I get out. But yeah, Apple's been on a tear. Where are we right now? Yeah, you can see we kind of had a flag formation. We broke out of that too. That's been nice. Yeah, we have clear skies to all-time highs right now. We really do. If I throw on the moving averages, it's above all of them. They're in the right order, 10, 50, 100, 200. So it's been fantastic with Apple. I'm curious how spreads are with them. 139. Yeah, Apple's weird. It doesn't... I don't know. It's not very volatile. Like this nice big candle to end the week was only like $2. That was a $2 move. So for me to get a good premium with Apple, I need to be pretty close to the money, which not very comfortable with in terms of swinging or swinging options on them. It's just going straight up, so there's not really a good entry for it. It's overbought now on the RSI, so something to be careful for. $40 minutes in right now. Let's check out AMC. Let's check out these meme stocks. So AMC, every week I keep saying you can do cash secured puts on them, and they've been working fine. I tried like the $35 level, the $40 level. I actually tried, was the last one I tried, the $40 mark, which was wrong line, right about here, because it's just been strong and it's been this very bullish pattern, this big bull flag. We didn't break out of it though. We actually broke down out of it. So that's a red flag, a red bull flag, if you will. No, that's a red flag, the fact that it broke below the bull flag. We pushed relatively low when we got back up, but we still closed red on the day on Friday. So that's not very good. Maybe the steam is beginning to run out on AMC, and the premiums really haven't been that great either. I didn't touch AMC last week because the premiums are just not that good anymore. Implied volatility is probably going down, therefore the premiums aren't that much. So I haven't been doing cash secured puts on them, and I probably won't because it's just not worth it. We can check it out. Single option at the $40 level, you're only going to get $50. And that's a little bit too close to comfort. I mean, I've been satisfied with the momentum, with the stability of it when it was in this flag, but now that we broke below it, I'm just not comfortable with it. Credit spreads, though. Credit spreads could work. The premiums aren't too bad for spreads here. I could play this level up here, which is kind of, the recent high, like a pivot over here. You can see we had resistance. We actually, every time we got above this level, we always came back down. This is the daily chart. Every day has closed below 61. We've gotten above it 5 times since, not including this giant green candle, but ever since that giant green candle, and we've been consolidating ever since, we have never closed above $61. We've gotten above it 5 times, closed below it every single time. Not only that, but we broke below the bull flag, so that's bearish, and it was a red day too. So to me, I think the steam's running out. The fact that we broke below the flag is bearish, and the fact that we haven't closed above 61, no matter how many times we broke above it, is also good news for a level up there at 61. A 61 level would get you around $40 though, and that's just a little too low in my opinion. Yeah, so maybe not. Check out GameStop too, just to give it some love. I actually drew an interesting range on GameStop. We'll make it blue. That it's been chilling in for a little while. So maybe, just maybe, if we get a breakout or breakdown from this little channel here, we could get a serious move. I'm not sure. You can even say that the level might go up here. So as high as 240, as low as 197. But I like this other level down here because it has some resistance. It's hit it a couple times. But it doesn't matter what the top line is because it looks like we're going to be flirting with the bottom line. If it breaks below 197, we're going to be in territory that we haven't seen in a little over a month or maybe even a couple months now. So we could get back down to the 170s, who knows? So that's something to look at. I wouldn't mind buying a long-term put on GameStop if it did break below this level. But GameStop's weird. It can shoot up at any time. So you got to be careful with that. But the 197 mark is just a clear level for a potential swing trade of a put contract. So that'd be something I'd be looking out for. And what I can do is set an alert. Create an alert. Price. Get rid of this one. Oh, whatever. Price below 197. And then this one we'll just delete. So I'm setting an alert. I want Webull to tell me when GameStop gets below 197. And then we'll look for a put. I want to see it break below by a little bit, by a few dollars, because technically it did break below 197 on Friday, only by 50 cents. It came right back up. So I want to see it break by more than 50 cents, because that could happen. All right, so let's think about this spread here, because I don't like SPY. Now we're just looking with Tesla and Amazon. Tesla is the 700 call credit spread. Amazon would be the 35.50 call credit spread or the 34.50 put credit spread. I'm more bullish on it than I am bearish, so I would probably play this put credit spread rather than the high of this channel. Although the high of the channel would be logical. We've been rejecting off of it for a year. So very possible that we'd reject again and you'd be fine with the credit spread up there. You get a lot of premium for it too. How much? Over 150 bucks. So if I did like 3 spreads and I got 150 for them, I'd get $450 in premium. That's 3 spreads. That's $1,500 at risk. That's like the max loss less any premium that I received. So $1,500. If I stop out at the credit spread level, then I would be at a 50% loss, because that's just how options work. Anything at the money would be a 50% loss. So divide this by 2. So I would have a $750 loss, but I received $450 for it. So it would be a $300 loss, max loss. Well, give or take some slippage, given where the bid ask is, or how I can get out, or how much wiggle room I give it. So if I play this spread, I could potentially make $450, or I could lose $300. That's actually a pretty good ratio. And the ratios do get better the closer to the money you get, but obviously the closer to the money you are, the more risk of stopping out. So I'm really tempted to play this level up here, thinking that Amazon will just reject off of it again, at least for another week maybe. It can go up there, reject, and then the week after maybe we get a push through it. So I don't know, or it could just blast off through it to the moon. I don't know. I can't help but be bullish on it. Playing a call credit spread is risky. Trading is risky. The 34.50 call credit spread, put credit spread, we get you. Yeah, this is weird. This isn't accurate data. You're not going to get $35. You get way more than that. I don't know. If I could get 80 to 100 bucks with a put credit spread at 34.50, I think I might take it. I might take it. We have this consolidation range as potential support, meaning like if the price gets in this range again, we might have more buyers to buy it back up. The 10 moving average is in our favor, and just the bullish momentum behind is in our favor too. It might not pull back at all. Who knows? So that's not too bad, but I can't help but feel a little weird about it. Tesla though. I think I'm going to go with Tesla again. I think I'm putting my money on Tesla again this week. I'm going to do a call credit spread at 700, calling for Tesla to stay below 700, because we keep trying. It looks, although it looks bullish, this pattern, this bull flag is bullish. It's continued to fail time after time. We break out of it, it comes back. We can't get through 700, regardless of breaking through the flag and the highs. We just can't. We couldn't hold it. We couldn't hold it. We rejected off of it, came all the way back down. We might break below this bull flag just like AMC has. See how it's broken below the flag? We might get that with Tesla too. $700 call credit spread. Yeah, if I can get like $100 for it, that'd be amazing. Maybe do 4 spreads of that. So if I do 4 spreads, 2,000 will be at risk. If I stop out at the level of 700, that would be a 50% loss. Whoops. Which would be a $1,000 loss, but I would receive $400 for it. Jeez, I can't type. It'd be a $600 loss. Get 400, potentially lose 600 if it comes back up to 700, but it might not, and I really don't think it would. It could. It very well could, but I just not liking it. I don't like its chances to push up and break through 700 right now. Not this week, at least. We'll see what happens. The spread, I mean, the gap will play a factor, in my opinion. If it does have a strong gap, then maybe I won't play it. But right? Am I right? What do I want to do here? I actually have another chart where I can put them both up at the same time. That might be helpful. Whoops. Here's Amazon. Here's Tesla. So ignore everything on the bottom. We got, oh, my head's in the way. Let's do it on the bottom then. I hope my head hasn't been in the way this whole time and with stuff. So there's Tesla. There's Amazon down below. We got people mowing their grass outside. You might be able to hear it, and I apologize, but I'm not going to tell them to stop mowing his lawn. What do you want me to do? Anyway, so these are the 2 charts here. I'm honestly torn, to be honest. But you know what? I am watching Amazon for a long call option. So I think I'm gonna do the Tesla trade. I'm gonna lock that in. Doing a Tesla call credit spread at 700, and I am actually watching Amazon for a long call trade. I almost had one here. Was I just talking about that? Yeah. I tried to get this breakout, but didn't have buying power. But now I'd be looking for a potential break of these highs here, 35.25. Because after we break there, then it's clear skies to the high of 35.50, which I think if we push up there one more time, we will break it. And if we break that, that's all-time highs. Who the hell knows how high this thing could get if it breaks out of a year-long consolidation period? It's Tesla. It could go, I mean, it's Amazon. It could go as high as like 4,000. It really could. So I'm watching that. If it breaks 35.25 and doesn't look too extended, then I'm going to jump in. Or even if it is extended, maybe wait for a break and then a retest. So let's shrink this down a bit. So let's make this green. All right, so if, let's say next week or Tuesday comes and the candle pushes up here, that's the break, right? Or let's say it gaps down a bit. So it starts down here and then it pushes all the way up and it finally breaks. Do I buy right there? Maybe. Although this candle is extended. You see, when I buy breakouts for a swing trade, I like to keep my stop at the breakout level. That way I'll be closing my option around the same price point that I bought it at. So it'll be a smallish loss, maybe break even if I'm lucky, probably not though, but a small loss though, if I stop out exactly at the breakout level. But if the candle is extended by the time I get in, it could easily or reasonably pull back a bit before moving higher. So let's get another candle. Boom. So if this is the chart, so if I buy on this initial break, I might get stopped out on a healthy pullback because it breaks below the level before it rips back up. So if the candle that breaks the level is stretched and a little bit extended, I would wait for a pullback or a retest to the breakout spot. Come on. So I would wait for a retest. So you want to see a little bit of a pullback to this level here. And then if it ends up pushing back up, then that's when I'd get in. And then hopefully we break through the highs or this orange line. And then we just keep going straight up, just nonstop. Boom. Okay, that's enough of that. So that's what I would look for with Amazon. I missed my long entry, unfortunately, because I didn't have buying power. But there's still a chance to get in for another bullish break. All right, guys, that's it. Any comments? I think you should try to manage the trades with adjustments rather than making guesstimates. Who is mowing their grass? It's like they're mowing my grass. That's how close it sounds. Sorry. Anyway. What's up, Ryan? Jazz, I don't know what you mean exactly. Manage trades with adjustments rather than making guesstimates. All we can do is make guesstimates when we don't have data to the right. And there's no really managing the spread. If it hits if it hits the spread level, then I stop out. Otherwise, you just hold it. There's really no adjustments. There's no scaling into a trade, really. I just open it Monday or Tuesday in this case, and then let it go. So I have no choice but to make a guesstimate ahead of time. That way, when Monday or Tuesday comes, I just open it right then and there and just hope that my technical analysis done on the weekend is accurate and helps me pull through for the week. Ben, it has been fun. So we're almost 1 hour into this, and that's pretty much everything I've been looking for. Doing the Tesla spread at 700. And then I'm looking for Amazon to break 35.25 so I can go long. I missed a long entry already, but there's another chance, I think. If we break 35.25, I believe we will give 35.50 a shot. And if we do give 35.50 a shot, I think we're going to break through it. And if we break through it, I think we could just shoot up to the moon. So looking for Amazon with a long option. Playing the 700 call credit spread on Tesla this week. And that's it. That's it. I'll try to get like $300 to $400 received with my credit spread and then just go from there. Any questions, comments, concerns, any stocks that you want me to look at before we head off for the day? 4th of July, guys. Markets close tomorrow. Go get some barbecue and beer, Josh. Yes. Yes. That's so much of a yes, I'm going to type it in. Yes. Just want to make sure I don't have anything else. I can check my watch list quick. Come on. There we go. Man, Weeble's taking a little while here. It doesn't work on Sundays. So I have Facebook on watch, but that's just been straight up, I think. Not quite. We pulled back off all-time highs, so maybe we can get another push through Facebook. Netflix has been sitting still. Could be another consolidation break above 540. I don't think I'm going to play it, though. I am watching Disney, by the way, right here. It's been in this little bit of a range. It could break up. It could break down. Who knows? Either one I'm fine with. I have alerts set on both levels. If it breaks either one of them, I'll look to go long with a swing trade. Jazz, I will review one trade that you're in. So give me the best one or whatever you have most concern about. I need the ticker and I need the entry. PRVB. Never heard of that one. Provention Bio Inc. Oh, this is a small price stock here. 2 short puts, 750. 2 short calls, $35. 2 contracts. Is that $3.50 or $35? $35 call? You're throwing a lot of information at me. 2 short puts at 750. 750 is right here. So you sold a put. That means you want it to stay above this level. Otherwise, you would get assigned. Unless it's a naked put, then you just really got to stop out for a decent loss. I mean, we're pretty close. Oh, this is the weekly chart. So we've closed above that for 4 straight weeks. The daily chart, we've been chilling. We got some nice support here. Looks like. Although that Friday candle is a pretty nasty candle. Huge rejection. Could be moving lower. I mean, when do they expire? Are you holding this to expiration? You do have a 50 daily moving average in your way. So the 750 short put isn't that bad. A short call at 35, I mean, that seems like a guaranteed winner because it's not anywhere close to $35. So those will expire worthless. A short call at the $25 strike seems to be a no-brainer too because we're nowhere near it. Depends how much time there is on these things. But I mean, we haven't sniffed 25. It looks like ever. We haven't gotten that high at all. So those short calls seem fine too. Okay, so it is the 4th of July. I do got to get going. We've been here for over an hour. Just to recap, I'm going to be doing the Tesla $700 strike call credit spread, this yellow line here. Playing this yellow line for a call credit spread. And then I'm going to save some buying power. So I'll probably use like $2,000 in buying power to open this spread. I'll have about $13,000 left over, in which case I will be looking for an Amazon swing trade if it breaks above this white line here at 35.25, because if it breaks there, I think we're going to be shooting up to the 35.50 range and possibly beyond that. Yeah, sounds like a good trade to me, Jazz. So if you can guarantee $200 profit, that's great. Or if that would be like a $130 loss, then that's fine too, you know? That's a solid risk reward at least. If it's like a $130 loss, $150 loss, that's fine. But all right, but those levels seem good to me. I feel like you'll be all right depending on when your expiration is. But yeah, $700 call credit spread, and then looking for Amazon long call if we break out. So that's it. That is it. Here's my 4th of July shirt. It's a Bigfoot 4th of July shirt I got off Amazon. America. So that's going to do it, guys. Enjoy your day. Enjoy tomorrow because the markets are closed. and you probably have the day off from your job like I do. So that's great. And that's going to do it. So enjoy your day off. Enjoy the holiday. Show your American spirit, your pride. Unless you're not from here, then you couldn't give two shits, could you? All right. That's it, guys. Enjoy the weekend, and I will see you all on Tuesday when I show you exactly what I opened and how it's looking so far. So happy 4th, Ryan. Happy 4th, all of you guys. I appreciate you guys sticking around here, liking the video, watching the stream. And as always, I will see you all next time.